Hello there. Welcome back to Cost and Management Accounting in 6. In this video, I want to look at a question paper of November 2016. So we're going to look at question 1.4, and also we are also going to look at question 1.5. So this is the question that we have. So let's just try to go through it, and then we answer what is required. So question 1.4 reads, Kennedy manufacturers makes furniture. They calculated that to make one coffee table should take 5 hours at a rate of 50 rand per hour. At the end of the financial year period, 14,500 hours were used to manufacture 3,000 tables at a rate of 45 rand per labor hour. So on the first part of the question, that's 1.4.1, how much was paid labor for the production of 3,000 coffee tables? So you know that the actual production is being reported in this part. So it reads at the end of the financial period, 14,500 hours were used to manufacture 3,000 coffee tables at a rate of 45 rand per labor hour. So what does it mean? We've got 45,500 hours being used, each labor hour costing 45 rand. So to get the total, we are going to multiply 45 times 14,500, then we can get the total that was used there. So we come here in 1.4.1. So we are saying on 1.4.1, we are saying our 14,500, and then we multiply by 45. And we are saying if you calculate correctly, the answer that you are going to get there is going to be 652,500. So this is what the answer that we have on the first part. Then we can obviously go on to the second part, which is 1.4.2, which is saying how many standard hours were used in manufacturing the 3,000 coffee tables. We've got 3,000 coffee tables, and the standard number of hours per coffee table are being stated here, where they are saying you should take 5 hours at a rate. You should take 5 hours at a rate of 50 rand per hour. Let's just start here. They calculated that to make one coffee table should take 5 hours. So one coffee table, 5 hours, and you know that the number of tables that were manufactured, we've got 3,000. So 5 hours in one table. What about 3,000 tables? We just say 5 hours, 5 times 3,000. Then we get your number of hours. So you're saying 1.4.2 is 5 hours times 3,000 tables. Then you get the total number of hours, which is going to be 15,000 hours. Remember, the question is asking for total number of hours. So we go to the next one, 1.4.3. So on 1.4.3 now, it requires you to calculate the labor rate variance and state as to whether the variance is favorable or unfavorable. So a labor rate variance, we need to put down the formula first, and then we just look for the figures that are needed, and we can just substitute formula. So we are saying this is now 1.4.3. We are saying this formula that we're going to use there is standard rate minus actual rate, and we multiply by actual time. So these are the ones that we're going to look. We're going to look for standard rate, actual rate, and then look for actual time. So we go to the question. Standard rate. Let's look here. That's where we have got the standard information, and we're given 45 rands per labor hour, which is our standard rate, 45 rands. Then you go to actual, we get it here. The rate of 50 rand per hour. So this one becomes our actual rate. So we are going to say we are going to say the standard. Remember, we are saying here, that's where we're having our actual. Sorry, we are having our actual here, and then here, that's where we are having our standard. So our actual is 45, and then our standard here is 50. So we are going to say standard rate minus actual rate is our formula. So standard rate is going to be 50, and then we subtract 45. And then we multiply the actual time. Actual time, we have it here. And where we have actual here, where we have got 14,500. So we multiply by 14,500. So we can just go there and try to present it in such a way. Then we're saying standard rate, we have in 50. We subtract actual rate, which is 45. And we multiply by actual time, which is 14,500. And then we do that, we are going to say 50 minus 45, obviously, we're going to get your 5. And then you multiply by 14,500. And the answer that we are going to get there is 72,500. And in terms of being favorable or unfavorable, we know that if our standard rate is greater than our actual rate, it's going to be a favorable. And if our standard rate becomes smaller than our actual rate, it's then unfavorable. Or you can use the hint that if you get a positive in the brackets, it means it's going to be favorable. So basically, we are saying positive answer in the brackets represents a favorable. So this is exactly what we have. So here you are just going to give an indication that 72,500 is the variance, then you write favorable. So this is what we have. Then we can try to move on to the next question, whereby we are saying, let's try to see the next question that we have. So the last part of the question, we've got two multiple choice questions that are here. I read various options are given as possible answer to the following questions. Choose the answer and write only the letter A to D next to the question number. That is 1.5.12, 1.5.2. So from here to here. So the first one is saying one of the following has no effect on cash budget. Remember, cash budget show actual cash movements in and out of the business. The anticipated actual cash movements in and out of the business. Non-cash items, we are not going to include them in the cash budget. That's the most basic hint that we can have in terms of identifying items that we should include in the cash budget. We have got non-cash items that are charged in the income statement. That is the profit and loss account that are not indicated in the cash budget because there will be no cash movement. For example, depreciation, there's no cash movements. Provision for bad debts, there's no cash movements. So looking at our answers that we have, got equipment purchased, which is whenever you purchase equipment, there's cash movement, so you can leave that one. Remember, they are looking for which has no effect. So bad debts, obviously, there's no cash movement. So we are obviously going to say it's not going to indicate a effect on cash budget. Then electricity paid, we are going to pay money there, so there's going to be a cash movement. Interest on mortgage bond again involves a cash movement. So the only one that is odd one out is a B, which is bad debts. So bad debts. Then we go to 1.5.2. A company working at 45%, there's electricity expenditure of 1,500. If they operate at 75%, the electricity expenditure will be simple proportion that we are going to apply there. So basically what we are saying is we are told that 45 is going to give you 1,500. What about 75? So that's the figure that we are looking for, simple proportion. So this is a figure that is representing what we don't have, because we don't have, that's what we are looking for. Then what we have is 45, because we are given 1,500. So 1,500 becomes the given figure. And this one is what we don't have. And this one is what we have. So given it like that, you can now be able to calculate it in such a way that we are saying, you calculate it in such a way that you will be saying, you'll be saying what you don't have, becomes your numerator. And what you have, this is what you don't have. And then what you have, a denominator, then you multiply by the given figure over 1. So simple as that. So coming back there, you'd see that what you don't have is 75. And then what we have, is going to be 45. And then you multiply by 1,500 as the given figure over 1. Then obviously we try to calculate it in such a way Let's see what do we get there. We are saying 75 divided by 45. The answer that we are going to get, you multiply by 1,500. And you're going to get your 2,500. So here we've got 2,500. So we look for 2,500 in the answers that we have there. So we're seeing that we've got B, 2,500. So this is our answer. So this is what we have, guys, according to this video. Let's subscribe and share. Let's share the link to all who are doing cost and management accounting and 6, so that when I upload videos, they get notified. Let's turn off the notification button. As for this video, I'm out to meet again in the next video.